Hello, everybody, and welcome to our afternoon session at the Payment Summit. My name is Layial El-Hadi. I'm the Executive Director of Fintech Cadence, and I'm really excited to be presenting you with our panelists for the session on what is Fintech's reality today. A large conversation to address, many different areas to make sure that we hit on. And so I'm going to get us started right away by introducing you to the absolutely wonderful panel, as I mentioned, that are here with us today. First, we have Carmen, who is a partner at financial services at IBM. We also have Sean, co-founder and CEO of Owl.co. And last but not least, Jen, our founding managing partner of Holt Accelerator. And a special shout out because he is also the founder of Fintech Cadence before he left us for Holt Accelerator. Welcome, everybody.
Great to be here.
Thank you. Thanks for having us.
Great to have you. So I have had the wonderful chance of meeting you guys and getting to know you a little bit. Why don't we introduce you guys to the audience here with us today? And Carmen, why don't I start with you to give a little introduction to yourself?
Sure, thank you. I'm Carmen Cutajar. I'm a client partner at IBM, and my specialty is payments and banking, and doing work globally with IBM and working with our new partners and new company Expertis, which we're very, very happy to be working with.
Yeah, absolutely. Some big news for you guys, Carmen, over the last few months, acquiring Expertis and now an IBM company. I'm very excited to hear a little bit more about it later on in the panel. Sean, I'm going to jump over to you next.
For sure. So I'm a serial entrepreneur. First two companies got acquired by Cosette, Microsoft. Third company was Impulse Technologies, which I took public before exiting to start Owl. And Owl is a fraud detection company for insurance claims. Really, we're starting off with disability, soon to branch out into workers' comp.
Amazing, Sean. Yes, and we've been seeing you in the ecosystem now, so it's really wonderful to see how you've grown over the last few years. And you also are a portfolio company of Holt Accelerator. So Jan, with that, a wonderful transition to you to give you a chance to introduce yourself and Holt Accelerator.
Sure. So Jan, super passionate about helping early stage companies and uniting our ecosystem in Canada from coast to coast. First started that with creation of Fintech Cadence, but then found some better leadership of Layial El-Hadi to take the realm and take it to the next step that it needed to get to. Shifted on to the Holt Accelerator. We're actually, the secret is still kind of getting out, not officially announced, becoming Holt Exchange, which we, for the last 4 years, have made about 27 investments, seeking really the best companies from around the world that are fitting with our ecosystem of now 500 advisors. About 70% are in Canada, 20% US, 10% international. To really bring them in there, and very fortunate that we, as we go through that process, can find rock star companies. I know it's a redundant term, people are tired of it, but like Owl.co, and been able to work with them since one of their first investors, I suppose, in their journey. So very, very, very proud and honored to be part of it.
That's amazing. And now the audience can see why we're very excited to have all of these three individuals here. And I promise you, it's not going to be a love fest between all of our different organizations with each other, but we're really happy to start diving into some exciting topics that have been happening on FinTech, although we each represent some phenomenal organizations. And if you haven't heard or connected with us before, make sure you do so as well. Before I get into a quick fun chat, I also want to just remind the audience that if you have any questions, please don't hesitate in putting them in the chat. We are here to make sure that this is a conversation. Stefan George has very kindly prompted you guys on the chat as well. So in case you're wondering where you can ask your questions or if you have any comments, please make sure you do so there. And I'll keep my eye on it and make sure that we are able to address it in some shape or form throughout the panel. All right, is everybody ready to get started? Yes, excellent. I see the most excited faces and the traditional thumbs up. That should be the logo for COVID. So let's get into it. We're going to start with a quick lightning round. I'm going to ask our panelists some quick questions, expecting some quick replies, and we're going to get into it starting off. All right, Carmen, I'm going to start with you. Your most used FinTech in your world?
I would say my credit card, just my tap, and I use that, and I use my credit card for everything because I get a lot of points in COVID too.
Yes, I think a lot of savings has happened for everyone there. Excellent. Thank you, Carmen. Sean, over to you. Other than Owl.co, of course.
Yes. Mine would be, well, I'm not a fraudster, so I don't use Owl.
Point.
So, it's probably the Starbucks app. the thing that keeps me running.
Oh yes, fueled by Starbucks COVID. Absolutely. Jan, you most used fintech.
Me, it depends at the time, but right now it's just the regular banking app. As I'm doing a lot of e-transfers as we're in the process of a move, and people got to get paid. So e-transfers is a nice way to automatically make those transfers.
Okay, and I promised the audience we didn't rehearse these specific answers, but they perfectly represent the situation we're in with COVID and exactly the role that fintech can play within it. Let's go on to our next lightning round question. Sectors you're interested in. Carmen, I'll come back to you.
Payments, just payments and having no cash, which I don't carry.
Oh yes, absolutely. Sean, over to you.
Insurtech, you know.
Good.
That's the big void.
And Jan, to you.
Obviously then insurtech if we've invested in a company like Owl, but for anything from lending, yes, we play in crypto, cybersecurity, anything that touches fintech and therefore our associated network can get value and potentially deals out of it.
Wonderful answers for everyone. And we'll be getting into those sectors in a little bit later on and diving a bit deeper to get your understanding, each of the panelists from that. But let's move on to the next lightning round question. Which innovation space interests you the most? Who's doing the most exciting things in innovation in Canada, United States, and the UK? I'll switch it up here a little bit just so that I don't keep putting you, Carmen, on the spot. Jan, I'm going to start with you.
I'll just go macro, I guess. When we're looking at Canada, what's really been exciting, I think, over the last 5 years, we used to talk like, can Canada build unicorns? And in the last 5 years, it's been such a surge. And I think there's just a bunch of pent up other companies en route to get there. So really proving that you can build unicorns in Canada that can tackle the world internationally. But the other thing I want us to look at, and what I'm excited about because I see it in other jurisdictions is, for instance, like the UK, for which they have things like IBAN and open banking that enables challenger banks to get whipped together relatively quickly. And I think we need to be looking better at that on the Canadian front of moving better on our regulatory front so that we can enable a greater competition in our ecosystem.
Perfect. And very succinct lightning round question, Jan. So thank you. Thank you for that. But I'm gonna take it. Regulations and why can't Canada be producing as many unicorns as the rest? So I really love that answer. Sean, I'm gonna jump over to you. Canada, US, UK.
Yeah, so I think by far the most innovation happens in the US. I think Canada's on a pretty good trajectory, but I think we're lagging in a variety of different ways. Be it regulations or just culturally, I feel like there's a lot more work. I think we've come a long way in such a short amount of time, but I think there's a lot more work in order to not only build the unicorns to be companies in Canada, but also to retain them before they become unicorns.
Yeah, absolutely, Sean. Wonderful answer. And these are becoming very Canadian answers. I love the politeness and the political correctness of it, but it is what it is. Carmen, I'm going to jump over to you.
I would say it's the US as well. And although a little bit of a different angle too with the Canadian presence in the US and how we're working together because our banks have quite a bit of footprint along West Coast, East Coast, and the South. So that's been giving us some interesting opportunities.
Perfect. Wonderful. Thank you all very much. And here's the last lightning round question, just something to make sure we remind ourselves of the positive end of the dark tunnel that we're going to be entering soon. One thing you're looking forward to once COVID is over, and I'll use over in quotations whenever that is. And Sean, I'm going to jump to you. One thing you're looking forward to there.
Travel. I'd like to go on a vacation. I have 2 small kids. I'd like to show them that there's more to the world than the 2 bedrooms.
Perfect. Thank you, Sean. Jed?
I'm going to call this the summer of 2021. We're on calls with a lot of international folks, and everyone's pretty excited and optimistic right now. I know we've all been kind of optimistic for a long time, and then just so that we can get together, hang out together. But at the end of the day, it's a people business. It's about knowing people and hanging out with them and supporting each other. So looking forward to having a drink with somebody.
Absolutely, Jen. Thank you. And last but not least, Carmen.
I'd like to definitely travel, and even better if it was with all my colleagues to somewhere hot and sunny, and we could all meet for the first time. Especially, I'm talking about Expertus and a whole bunch of new people that have joined we all just want to see each other and have a great time, like nothing happened.
Yes, absolutely, Carmen. And I see a few of your colleagues from Expertus here on the room. So welcome to all of the Expertus people joining us and the IBM people as well joining us. And hopefully, like Carmen said, you guys will all be able to meet. I have to say that's one thing I'm looking forward to, partying with people and not being worried about how far I'm standing next to somebody. So that's also going to be a positive thing to look forward to. All right. So over the last year and over the last few whiles, since the new wave of fintech has started, it's really evolved and changed quite significantly. And it's no longer just companies entering in, or tech companies and technology entering into the finance sector, but fintech is starting to really become integrated in other sectors as well. We've heard of ag tech in fintech. We've heard of health tech in fintech. What does fintech look like today? And Carmen, I'll start with you.
Oh gosh, fintech, it's just about in every sector, everywhere you can imagine, there's something related to fintech. And the way it looks right now is, at least it's looking like there's a lot of regulatory and things like that we have to all deal with, which is a challenge that we're all working through collectively. And then, simplifying some of the more common things that we all need to do, like Swift, for example, and doing things like that globally.
Absolutely, Carmen. Sean, jump over to you.
Yeah, I think regardless of the sector, the moment that nowadays you want to add sheer scale to it and you want to monetize it, it becomes heavily fintech, and like you said, we're seeing it in pretty much every sector that exists. The pandemic really made these changes more profound, where traditional methods of conducting business is not the norm anymore. So everything has to go online, and therefore, fintech becomes the face of almost every sector.
Yeah, absolutely, and an exciting face, right, Jen?
Absolutely. I think, look at it. Andreessen Horowitz came out with the bold statement, right? Every company is going to be a fintech, right, in the future. And if not, they already are. I mean, look at any company, right? It's the flow of capital, how it moves in and out, and how do you better remove friction? How do you create trust so that we can transact between parties right now? Every business has to go through that. And so, you're talking about things like embedded finance, right? So the ability to, whether it be, hey, I'm purchasing something at e-commerce, but when I purchase that thing, I want to be able to also pay for it in a certain mechanism. I want to finance it a certain way, and I want to insure that product when I purchase it, right? So all these things kind of coming together. I mean, like ag tech too, right? It's hard to escape it, but at the end of the day, those are big, we call them infrastructure style projects. In some ways they are, and those require financing. Those require insurance. Those are big plays to be able to do it. So how do you integrate all those systems into it? We've seen a company like one of our other portfolio companies, Agrio, who are leveraging satellite data and other data, all forms of data, to better underwrite that information for financing and insurance purposes for the farms. Now, 1 in 14 people are farmers. There's going to be a global food shortage by 2050. These are super important things sometimes, I think, in finance that we forget about, that they're actually really solving some huge issues, and in fact, arguably some of the biggest areas, right, in terms of the flow of capital and how we move it into the areas that are of biggest concern for us.
Yeah, absolutely. And, even for us at Fintech Cadence, we were just speaking to one of our partners out west, and they're looking to launch an agricultural fund and wanted to see what would the relationship be like with Fintech. So it's no longer that silo of you guys are working on ag tech and we're there. Agrio is a perfect example of that, intersecting two worlds, as I'm sure many in the audience and on the panel can think of other examples there as well.
One comparison, sorry, it's to Sean, in fact, because I look at his background, and correct me if I'm wrong, Sean, but I used to see you as, you've come from an ad tech space, right, and marketing, and you really understood how to profile individuals. Maybe speak to that, and how, now you're doing fraud, right? Like that how that similar profile related very well to the fintech space, and has been super important right now in a time of COVID and crisis, I would say.
Yeah, absolutely. I mean, we live in a world where personalization and unique identification is the key driving force behind any decision online. whether it's finding next best actions, whether it's finding fraud, whether it's cross-selling, upselling, whether it's at almost any aspect of it. So when was it, 14 years ago, my ad tech company, we were really attempting to uniquely identify individuals, finding their interest, using data points online, and that was sold to Microsoft, which was used for Bing. But now and back then, there were very few models that you could build because there were so few data points that you could find online. Nowadays, every day we have more footprints online than the day before. So, to use those footprints in a positive manner to move this industry forward is I think the basis of any form of success.
Yeah, perfect. Thank you for that, Sean, and that different perspective there as well. All right, so we know with the context of the pandemic, we don't want to spend too much time focusing on that, but just looking at the challenges that the sector has gone through over the last little while, and with what's happening in terms of globalization of companies or localization of companies, how do you feel that the Canadian fintech ecosystem has fared to date and what we're looking at the moment? And Sean, I know you just ended off, but just to give Carmen a break from starting with her, I'll jump to you, and then Carmen will come to you next.
I'll start with disagreeing about challenges. I think that we should all look at fintechs and just say you're welcome with this pandemic. Whoever started this virus, it's the greatest thing, in my opinion, that happened for fintech, because it shined a huge light to the traditional methods of, any form of transaction. Think about like every time you wanted to send a payment, you had to go to a bank, show an ID, and send that money. Any form of verification had to be done in person. And all these things. I know that 2020 was, we saw a dip in some specific metrics, but it got every company working behind the scenes in order to digitize and fundamentally. Build the infrastructure that's required for the scale that we should be at. In 2021, we should have been way ahead, and I think this sector was really lagging, and the pandemic really helped in that matter.
Perfect. And if you don't mind, Sean, I'm just going to ask you a follow-up question there, because you really, you're fintech, living the fintech life. Do you feel that fintechs were used and maximized as much as possible as they could have over the last year?
Yes, I think there's a lot of work being done behind closed doors. So I think they weren't being used enough the years before, right? And I think last year you're seeing a lot of partnerships with the incumbents, and I think in 2021 and 2022 you're going to see a lot of those works coming to fruition.
Okay, great. We'll keep our eye on those there, Sean, because I do agree. I think there is quite a lot of things happening that we'll see the benefits of in the future. Carmen, over to you.
Well, I completely agree with Sean. You couldn't plan anything like that, even if you wanted to, right? What we have gone through now for a year and a half, just about. It's just made it all the more how important it is to be able to do things touchless, to not have to go, and press buttons and things. And even now I'm mortified. I'm one of those people. Before COVID, I didn't like to touch anything anyway. So it was great to be able to go and touch pay just about anywhere until the credit card, until it decided that it wasn't going to work anymore. But I got the replacement really quickly. It took just 2 days. But it was a great test of that. And also, for those of us who are in the industry and we understand it better than most, but having that discussion with the layperson, or your parents, your kids, and explaining how this is really working, and it's amazing. And the very less use of cash, which is a whole other discussion, and checks. Yeah. Interesting thing, because checks were going up, and which made no sense. But, that one's an interesting topic in itself.
Yeah, absolutely. And you touched on it right, Carmen. It's much easier to explain to my parents now what I do in fintech, as they've now started to use a lot of these tools that are available to them. So it has opened that dialogue there too. Jan, from your perspective, thoughts on how we fare today in the Canadian market?
I mean, if big picture, you can't. It's hard to argue at least the initial points that we're doing substantially better, right? Like if we look at 2020 was more or less on par in terms of funding for 2021. 2021 so far, actually Q1 has seen a huge jump. First quarter has like doubled. So there's a pent up demand to invest in it right now. So that's super promising, and we're always thinking, okay, that's about time. But there's still like huge challenges too, right? Like and we're talking Canadian, regulations just at first, especially initially, like took a back seat, and we said we got to focus on the pandemic. And I don't think that was necessarily the best choice. I think we should have still been double down on trying to move across very important aspects. And I think whether it be open banking regulations or be able to support more understanding around the crypto markets and central bank digital currencies and all that kind of fun stuff. I think we just haven't been a little slow there. I would also say if we do look at the financing side, seed financing of anything is short, and it's mostly just a risk aversion at that point, and people pumping money into the later stage, which is why the later stages have certainly increased in terms of valuations. Not here to say whether or not those are justified or not, but I'm here to say that the seed is just overlooked right now. And especially on the Canadian front, it's like anything when it comes to Canada. We tend to lack competition. So we lack a competitive LP market. And then we haven't properly tapped into the angel networks to feed that, to kind of solve for that stuff. And so we face it ourselves as we invest in companies, and it's challenging. Like we certainly need an international investor base to help bring our companies up. Otherwise, it's just the lack of capital available for them to get them across that chasm. Thereafter, a lot of capital starting to be available much more quickly right now. Great time to be in fintech for sure.
Yeah, and I'll just quickly jump in here with Fintech Cadence. We've also seen the same thing, and I just want to iterate the importance it is to fund these seeds, early stage startups. I know Senator Colin Deacon, who many of us have known or heard of or heard speak about this issue before as well, also highlighted it on LinkedIn a few days ago, stating, while it's great to have all this capital, it's really key that there's also the early stage funding. And as an organization that focuses on that, it's not very modest of me to say, but I think it's also really key, because I do personally believe it's going to have a negative impact on the pipeline of fintechs coming in the future. And we don't want to see that pipeline dry up at all. I don't think that will be beneficial to the ecosystem at all. Wonderful to hear everyone's perspectives on that. I want to jump over a little bit to more of the sectors in fintech. Earlier, I asked you in the lightning round, the sector that interests you the most. And so I just want to scratch on that a little bit more and hear more of your thoughts. So Carmen, I'll start with you. Payments is interesting and exciting to you. What are you looking at in payments? What are you keeping your eye on and thoughts there?
Well, there's so much in payments, because it's the ease of being able to do payments. But one thing that does bother me about it when it comes to especially being cashless is how we help the underserved. So people who don't have a credit card, people who don't, like, what do we do to enable being able to give a donation? And I've seen some of those. I've seen some creative solutions on being able to give donation and a tap, things like that. I think is an interesting challenge. So it's like, payments in a system for those who need it most. I'll just put it that way.
Perfect. Thank you, Carmen. Sean, for you, it was insurtech. What's exciting about insurtech and the work you guys are doing with that sector?
Yeah, I think contrary to a lot of like, to me at least, what's exciting is not so much the consumer siding, the consumer and like the insurtechs that offer insurance directly to consumers, which is cool. But I think there's we made a conscious decision to help the incumbents or become tools that the incumbents can use in order to improve their services. Because right away, once we can find an applicable solution to their processes, they can then immediately roll it out to millions of people, and we can see the effect of it very, very, very quickly. So it's that sheer scale is incredibly exciting for me. As an entrepreneur, we always build small companies and we try to build it really big. This is the first time, at least I'm experiencing, selling to enterprise where, a small solution, a small part of, their processes that we can sell to them and they license it, and all of a sudden we have 10 million, 20 million people benefiting from it. So that's very exciting.
Yeah, I can absolutely imagine that for sure. Jan, you mentioned a few earlier in the lightning round, but I think lending is also one that you're quite excited about. So I'll give you a chance to jump in here.
Yeah, I mean, I'm excited in a lot of areas, but if we look at lending, I mean, if anyone's ever read the book, The Debt, the first 5,000 years, right? It arguably debt and credit was, in some cases, maybe the first form of transacting before when we had coins and payments, right? And so we know they'll kind of go hand in hand. So it's an important notion. And when you think about that, the access to credit and those who can have it to like, you can get in the game, right? You can participate. For those who can't, it substantially holds you back. So I think it's a great equalizer. And if we look at this time, there are certain areas of credit that are doing better and others that are doing worse. It depends. If you even look at consumer lending right now, I can tell you some of our partners are actually faring very well, right, in terms of the situation. But if they look at merchant lending, especially if you were servicing certain industries, right, whether it be tourism and travel, it's going to be a harder pressed right now. But I think there's a lot of interesting innovations that are still yet to happen. The underwriting to better provide credit, better vehicles to deploy it more quickly, more seamlessly. And everyone's facing the same issue of fraud right now. There's a surge across the board. It doesn't matter what industry, like it's just a rampant increase. So how do you protect against it? Maybe using fellow portfolio companies like Owl again. But yeah, it's just an exciting time. There's a whole bunch, and there's a willingness to adopt new technologies right now. We've seen from the players. So yeah, I feel like we're in the first inning right now of a 9-inning sort of wave, shall we say.
I'm so glad you used the one sport that I know nothing about to come in as an analogy. I'm guessing that is a good thing. But if you are saying what I think you're saying, then I do agree with the fact that we haven't even begun to scratch the surface of all the opportunities, especially in the three sectors we've mentioned here: payments, insurtech, and lending, and in many others that I'm sure especially in Canada, we'll be able to capitalize on, hopefully, in years to come. Jan, I'm going to stay with you, and I'm going to start switching the area a little bit, and I want to start focusing on now tech fins. And for the audience who are not super familiar with that term, it's big technology companies coming into the financial sector. Often think about it as Apple or Amazon entering and providing financial services to their customers. Question for you here, Jan, and for the rest of the panel that I'll come to. Do we see this as a major disruption in the financial sector? Do we see it as a positive or a negative? And if you do see it as a negative, is there a way to mitigate it?
I mean, overall positive. I think of it from a consumer perspective. I mean, we need increased competition. We need more better products that are in there. So to get more pressure into the ecosystem, more feet to the fire, I'm a big advocate of creating competitive places to enable these sort of things to happen, innovation to occur. There's tons happening right now. So if you go in the Asian markets right now, the lack of traditional markets and infrastructure that's there has created realms where the big tech giants have been able to leverage their data to better underwrite and serve and provide financial products, right? And so systems have been changed a little bit. We're seeing that also on the Western front, whether it be, some of the bigger players leveraging their data, again, to offer financial services, whether it be Amazon or others, to offer these sort of financial products. That doesn't seem to be going away. If anything, we're seeing an increase in amount. Big questions around regulations. And so now the banks, I'm sure, are asking the questions, are we held to the same reporting regulatory standards, which is a fair question. My biggest concern, though, is always about, the early stage and how do we create a fair way that all players can enter into. And the big question for me is usually around data and the access to data and who controls the data and where is their data and all those fun things. Because if you're a big player, you're sitting on loads of data. You can repurpose, you can reposition, you can build out new products. You're at an advantage. So what if you want to restart and to build out? If we have also a belief, sure, we said that every company was a fintech. Well, we also believe that every company is a data play or some form of AI play, and you need data to be data play, obviously. So I think, access to it is crucial, and leveling the playing field, which are things like open banking that we need to talk about as part of it. But there's a lot more into that. Like if you look at Australia, they didn't just focus on banking, they focused on multiple industries to be able to make that happen, right? The right to own my data and control it and give access to the right parties who require it, but also protecting against others from just being able to re-whip it up. And otherwise they'll have a monopoly on it and make it more challenging. So anyways, sorry, it's got a little long-winded there at the end.
No, I think you're hitting on some really fascinating points, and it's really great to see that perspective on that. And I know you mentioned banks being concerned about the competitiveness and the regulation side of things. And I know the conversation has centered a lot around open banking, specifically on tech fins, maybe here in Canada predominantly, coming in and creating that competitive market that banks will not be able to go up against. So I think wonderful thoughts there, Jan. Thank you. Carmen, I'm going to jump to you because I think it's very interesting to hear from IBM about this topic and your thoughts there.
Well, a lot of the focus, and I've got a whole bunch of things going on in my head about data, because that one, I mean, that especially whose data, where is your data, and who really is the keeper of that? Because it's not you at this point. So it gets interesting, and with what we've been doing at IBM, it's really creating an environment working with most of the banks globally, and many institutions on infrastructure. And there was another discussion earlier in the sessions today about the hybrid cloud solutions, and just making it easier for all of the financial institutions to be able to do something quicker, get an infrastructure, pay as you go kind of services, and working with them, not taking over the banking. And it's interesting. It's just been and then dealing with that globally with different regulations, back to the standards and regulations. That one is a huge challenge. Mm-hmm. Everybody wants the data.
Yeah, absolutely.
Data is secure, and we've all avoided the let Sean go into the security part. But people are getting very clever. It's really tough, even for those of us who are in this industry, to get. It surprises me what I get that's actually spam, and you have to double check and look at it. It's just getting really, really tougher to detect fraud coming at you.
Yeah, absolutely. And Carmen, we touched a little bit earlier on the acquisition, of course, that you guys had with Expertus, and curious then, from a large tech company, seeing a company like Expertus and realizing the best way is to partner with them in an acquisition structure there. So I don't know if you're able to speak on that as well.
Yeah, well, they're wonderful, and Expertus has established a great base of clientele and services that they've been able to provide, and have done really, really well at it. And I'll just do a shout out to Montreal as well, and the talent in Quebec in general. It just seems to be, in Canada, we have that central location for a lot of the technology startups. So that's part of the solution for us. They're providing services that are consumable. And if we scale that up onto an infrastructure, and I think someone mentioned IBM Cloud for Financial Services earlier, if we put that all together, and that's what we're doing globally and within Canada as well, and the US.
Yeah, that's wonderful. And as
more to come, a lot more to come.
I do appreciate the Montreal shout out, though, Carmen. That is much.
I love you all. I wish I could it's gonna be the party.
Wonderful. Sean, I'm fascinated to hear what you're going to think from a fintech perspective about technology companies coming in. Do you see them as another pool of partners that you can work with? Do you see it as a negative, or do you just see it as a positive for the ecosystem at large?
It's absolutely positive. I fail to see any negative aspects of it, because historically tech evolves. I mean, it was born in the coattails of the giants. They built the industry, and we serve around those industries. And I think, them coming into fintech, it's inevitable. They already have Apple Pay, is Amazon creating grocery stores where you can just go in, pick your items, and leave. I mean, if they're not going to do this, who will, right? But me, as a CEO of a fintech, it's my job to make sure that my business builds enough moats where nobody can compete with, regardless of how much money or time or resources that they have. This could be through usage. This could be through learnings from using and getting market share quickly. It actually pushes us in order to be more innovative and more unique in the market. Otherwise, if you take all of this competition out, then we're all just going to be left with mediocre products. And I just wanted to touch on one point that Carmen said. I think it's important as long as speaking specifically about finance, banking, by regulation, by large, we do own our own data as consumers. So we can actually determine how it's used, where it's used. Whether or not we have the knowledge or if it's explained correctly to us is one thing, but it's an important thing to note that at least in Canada, through the Privacy Act, the Bank Act, in the U.S., all the pretty much state-by-state jurisdictions, they do allow you to withdraw, to see any of your data, pull it out, and determine how it's used.
I do want to throw in a caveat. I'll just give an example. As I was recently, doing some financing purchases, won't name which financial institutions, but they had some clause in there, and you basically had to just accept it or you don't get your financing. I'm sure you could push back on these standard agreements, but it basically says we're going to reuse your data accordingly with other third parties to resell it, and you may make money off of that, and that's it. We may offer you more services, we may not, but it's like, this is my data, right? So it's just little things like that the average consumer is not catching that. And furthermore, it's like, I'm going, well, if you're making money off it, why can't I? Anyway, so I think there's still an evolution that we need to get there to move forward.
That argument could be used in like social media. You use the platform for free. It's a right of service. So I think there's an argument to be made that they give a service, they can determine how they can use your data in order to make revenues for themselves or to make your experience better.
It's a transparency. Yeah, just as long as they're transparent and you don't have to read through a lot of. It's getting better. What you have to read through, make it a little more understandable.
I think I totally hear on the social media. I don't think at the beginning we understood how it was being, and then these models are set up, and that's why we have things like antitrust in areas to protect us in the future, so that when they do, we can, because we didn't understand as a consumer, like who's protecting them at the end of the day. Now they're really largely set up. I am starting to see some other social media companies that start to establish that reshare your data and you can reprofit on. Those are very exciting, but it's hard to rebuild a market network of that size at this time against them. So. I think there are some steps through time that I'm hoping competitive pressures will enable a little bit more fairness in the way that the data is being utilized by using on behalf of the consumers that are using the data.
That's a fantastic idea for the next startup. A centralized terms and conditions, that everyone just taps into, where it just gives you a summary breakdown of what it all means.
There you go. You heard it first.
There we go.
Sean, you need to IP that or protect that real quick. Although I hear if you announce it publicly, then
let's open source it. It's okay.
Carmen, I saw you had unmuted. Did you want to jump in on that comment?
Oh no. I just thought it would get into a dialogue. It'll have fun with data.
Yeah, yeah, absolutely. And I think there's quite a lot of hot topics around just this one area and this one component. And I know open banking has kind of brought that to the light, especially in the last year or so. And I think it always comes down to education, right? Once every stakeholder understands and is aware of what it means, then we can really start having the most honest and transparent conversations about how we want it to proceed. But agreed there.
Well, the big controversy, right, on the end, that certain technology where now you can see what all your apps are, you have to give permission the one time, and it'll tell you what all your apps are trying to do as you go in on your phone.
On Apple, right?
Yes, that one can be pretty interesting when you can really look at what they're doing.
Yeah, absolutely.
Right.
I know I've already heard some controversy about that and why Apple is really doing that. But yeah, I mean, it starts that conversation of awareness for the consumer, right? First and foremost, the most important thing. Absolutely. I'm going to use this chance as well. We don't have too much more time, but for the audience who are with us, if you guys do have any questions or comments or want to jump in, I know you don't have the audio to do so, but feel free to put it on the chat, and we'd be happy to take it up and discuss it as a panel here as well. All right, I'm going to move into more of a bit of the acquisition story. So we've already touched a couple of times on IBM and Expertus, not to use this as a platform to advertise that wonderful partnership. But in the last year, so I'm curious to hear from everyone. We've been hearing a lot about companies being acquired. Mocha, formerly Milo of Montreal, being acquired by Mogo, Verifin by NASDAQ. I'm curious to hear from all of you how you feel the role of acquisition is going to play within fintech. And of course, just to also see what you think is going to happen in the future, where we're going to continue to see these acquisitions from international and national companies as well. And Sean, I think I'll start with you this time.
Yeah, of course. So it is a question that what do I think about, I think it's only going to increase, like Jan mentioned. Q1 of 21, we've seen more M&A and IPOs and acquisitions than any other quarter ever before. So it's on the up and up. It's only going to increase, and it's great. It's great for a number of reasons. One, it allows the tools that are used by masses to acquire innovative ways of doing their business. Expand to bigger horizons, offer their services to broader businesses and people. I also think as a founder level, it's great because it allows you, like I've had a few exits myself. You give birth to a company, then you pass it along and you go on to the next thing. I think there's an argument to be made that we need entrepreneurs to routinely come up with different ideas than being stuck with one idea for like 20, 30 years. I'm not saying one way is better than the other, but I think it's essential that entrepreneurs who kind of learn the way of the land to keep coming up with different ideas and try to improve things, multiple things, as opposed to one thing incredibly well. So that's where I stand now.
Perfect. Thank you, Sean. Jan, I'm going to jump to you. Very curious to hear from your perspective, the funds that you guys have been doing and how you see the acquisition play a role here.
I mean, it's great news from a fund perspective, assuming, of course, the acquisitions come late enough to justify the returns, right? There needs to be a certain growth and scale before that to make the economics work of an early stage fund. Early stage funds, it's really hard to get the economics to work well. So they get acquired too early and you have too many kind of first base, second base sort of hits. You need some home runs and grand slams to justify it, right? So, and what I mean by that is in the early stage, I think the Canadian ecosystem just really seemed like it evolved, right? Companies were getting acquired previously at an earlier stage. It's much, much later now, right? These are billions of dollar transactions, and Mocha was 100 million, but still, like that's great. That's fantastic, and that took 5 years. So we're working with seeing Phil Barrar and the team at First to go from inception to where it was as quickly as it was. It's super exciting for the ecosystem, knowing there's a path within 5 years to $100 million. So I think what we're seeing is that's getting better, and everyone's trying to build the rails and infrastructure to support it. And as those companies exit, they give back into the ecosystem. So, some would argue we're in the fourth wave of fintech out of the valley. Depends on how you look at it. Maybe Canada's in the third because we missed maybe the first. But each time those waves push bigger and enable more innovation to come through it. So because as they exit, they're able to give back into it. So it's just really exciting times.
Yeah, and I know we're shouting out here Mocha or formerly Milo when we first knew them, and Jen, I know from the early stages.
Or My Bank. Or Bank Me.
Is that what it was? Okay, yeah.
They weren't allowed because you can't use bank in your name. That's a fun fact. Probably. Anyway, so I'm not trying to dig up dirt again, but that was a fun story.
No, not trying to rile up the feathers, not at all. No, but I mean, I remember from the early days of Fintech Cadence, you were working with Phil on that, and you're right. It's wonderful to see that whole transition and that story happen there as well. Carmen, any comments there on your side?
Well, it's been from my side as a pretty much career IBMer. This is super exciting for us because especially in the consulting part of IBM, we've been on a vendor on buying and having companies join us, which has not happened before. It's unprecedented, and it's been absolutely wonderful. Like we can bring scale globally, and have these companies like a wonderful one like Experta's come in and be able to retain everything that they do and be able to expand on that. And we're all learning from each other. It's wonderful.
Yeah, I love that, Carmen. I love that the concept that we're all learning from each other, right? And I think that's something for us to all keep in mind as we grow and develop in the ecosystem. We have about 10 minutes or so left, and I'm going to 3 more questions for you guys, and then we'll wrap up. Just a reminder, again, to those who are in the audience, if you guys have any questions or comments, please shoot them out. I think everyone is quite excited to answer any questions from the audience and engage with the audience as well. Second to last question I want to ask the panelists that I have here today is, we've touched on fintechs, how they've gone through in the last year. We know some of the challenges, the seed funding, et cetera. But I'm also very curious to know, over the last year, what has not worked? And this is really from the fintech's perspective. So Jan, I'll start with you. Sean, I'll come to you next, and then Carmen.
What has not worked?
What has not worked?
Where does he start?
You guys were so positive earlier. I just assumed this would be.
I mean, there's always challenges. What has worked and therefore what does not work. I mean, I'll give you some examples. Is when COVID hit, there was a shift, right? There was huge opportunities, but there was a shift, and so you had to identify, were you already in the blue ocean? Were you just next to a stream that you can get pulled into, or are you paddling up, the wrong creek, so to speak? Another analogy for it, but. So in doing so, you had to ask questions, and most founders really needed to look at a potential pivot of some sort, or a refocus, shall we say. Everyone sort of refocused or had to tweak, and it was hard, and that required change. And you couldn't really, I mean, that's inherent for a founder, is loving change and embracing it. But like, really, everything had to be reshifted. Even if you were doing similar stuff, you still had to shift accordingly, like everything, because we went online. And like I just even look at, not to throw Owl there, but I think you guys did fantastic because you had several products and pinpointed, right? Like, okay, we are crushing this one area, and maybe you could tell a story instead, and that's really what took off. But being cognizant of it and listening to the customers and the markets and demand to adjust accordingly. So maybe I'll flip it to Sean in this case.
Yeah, that's a great point. That said, we had we were in the KYC space, we were in next best action, upsell, cross-sell space, and we were doing a bit of fraud. And then we saw, as COVID hit, we saw large incumbents focusing less on revenue generation because there was no revenue coming in for some time, and more on trying to figure out cost savings. And you shine the big light. Look, we have billions of dollars in our books sitting in fraud, and we're not doing anything about it. So what can be done about it, right? So they started looking at vendors in order to come in and try to resolve the problem, and we were there for it. And we made the decision to solely focus on the fraud detection aspect. So that's what didn't work and what did work. So great example, Jan.
We need to have more of your portfolio companies here, Jan, to give all this visibility.
I got 26 other answers to that right now. So yeah.
Okay, so before we get into it, Holt,
I'll add one more. I'll add one more as a founder. I think it was what did not work is, even though there were opportunities in sight, there was a lot of uncertainty with the pandemic, and that caused fundraising incredibly difficult for a lot of people, right? Because funds were now very hesitant. A lot of LPs were pulling funds back. A lot of VCs were being very hesitant. They started giving out, if you look historically on some of the terms and data on some of the term sheets in Q2 of 2020, they were putting out garbage terms, like 2x liquidations, 3x liquidations, things that founders should never accept. But it became a norm for about 1 or 2 quarters. It's now shifted way back.
Right. That's great perspective there. Thank you, Sean, for that. Carmen, jumping over to you.
Well, I think is a bit of a different take on it, but our energy, like we've just been working so much in this industry. We're only human, and although a lot of us thought we were superhuman, the collectively everybody's burnt out, and there's we need more people, like just the talent out there for all of us, being able to do that. And at the same time, a lot of education has stopped, colleges, universities. We need to keep that going. And COVID has put a big glitch in that, and we'll be able to catch up at some point. And we'll see. But when we're not collectively robots, like we are humans and tired humans.
Yeah, I know we were talking before we jumped on the call. It's not age. It's just the situation.
And global, it's global. We're all going through.
Perfect. All right. In the last few minutes, I want to ask you guys, if we look back a little bit, what did we wish we knew last year at this time? And Sean, maybe I'll start with you this time. Carmen, I'll jump to you next, and then followed by Jen.
I wish we knew we had a bit of certainty. I think the unknown was the biggest fear. We didn't know how long things are about to last. We didn't know when vaccines were coming. There were reports that's coming in 5 years, in 3 years. So that caused a lot of panic. The uncertainty definitely trickled down in everything that we do in regards to fundraising and in regards to sales, in regards to, we didn't know how fast we can scale. We didn't know whether we should cut the team in half in order to have longer burn rate. We didn't know all that unknown made it really, really hard, if not impossible, to operate. So there was we were guessing as the days were going. So I wish we knew that, in what we do, we know now of how things, go back to normal after a year. Just knowing that, we would have been able to plan much more accordingly.
Yeah, absolutely. Planning and ambiguity is hard, especially when you don't have that historical context of what did another pandemic look like in this kind of situation. So I definitely agree, Sean. I know from our side, we were looking at the ecosystem, and there was a lot of even banks that we partnered, who were partnering with fintechs, had to hold their partnership conversations because they didn't know what their reality was going to be as well. So I completely agree with that one, Sean. Carmen, I'll jump over to you. What did you wish we knew last year at this time?
I agree with Sean. I think I wish we knew, and maybe that we would be here still where we are now, or just at least accept it. It's more of I don't think we were accepting it either at the time, and that, we are okay. We will be okay. Things are starting to finally move now. And I wish we knew how really drastically this would change just the way humans interact and how we're going to move forward, because I think that'll last for a while.
Yeah, absolutely. And then Jen, last but not least.
A lot of good points. I guess I wish we knew also, there's two sides of it. Humans are incredibly resilient and can change very quickly and adapt very quickly. And that's why I love working with founders, always kind of at the front of that, right? But when everyone's forced upon it, we will adjust and realize, okay, we can get through. So I'm not saying it hasn't been hard. We're all in different boats in this wave that has had its challenges. I also wish knew where some areas have taken off substantially. Also knowing that some areas still require substantial more pushing forward. So it's just better understanding how its effects on overall markets, right? And so some you're going to get, like I mentioned, like a blue ocean, and that's going to be the owl fraud situation. Others are going to take more time, and they'll be moving more quickly, and it's going to accelerate it, but it's still going to take more time to really get into that blue ocean. So just better understanding of where all the key opportunities lie, I guess.
Perfect. Wonderfully said by all three of our panelists. I'm going to give you guys a chance if anyone has any last words to jump in.
Thank you, Layla. Thank you.
My pleasure. Sean, you unmuted. Did you want to jump in as well?
I was just going to say, we talk about a lot of resilience for founders and companies, but I think for this is a pass back to you, Jan. I think there's a lot of resilience for funds, accelerators that have to deal with the early stage startups. I know it would be very difficult for us to get to where we are if we hadn't got the support. So I think there's a lot to be said about in these difficult times what these funds were able to achieve.
I appreciate that, and I guess I'll expand it just to our overall ecosystem. I hope that obviously to the founders, it's not easy, right? We're in the trenches day after day, and we try to at least pop in to do what we can to support. But I think as the overall ecosystem as a whole, wishing that we're getting there, but I do wonder what we're going to be, right? I think we're at a phase where we're starting to ask, what is Canada's culture? What is Canada's innovation culture right now, right? We're starting to mold it and we're starting to shape it. And we have to ask those questions. And I think, are we too risk averse versus risk taking, right? As one of the components, there's more areas to define culture. Do we want to be more collaborative versus like when we look at investors and then the European approach of multiple investors around one deal versus just one investor taking the full deal, which tends to be a more U.S. approach. These are questions we have to ask ourselves. There's no right or wrong answers, but I think we should be more risk-taking. But hopefully, now's the time to shape our culture after this. So I think we should be talking about that going forward.
Perfect. Wonderful note to end the panel. Sean, Jan, Carmen, I cannot thank you enough. For all of our audience, thank you very much for staying with us. And now we'll hand it back to the studio.
Thanks again,
Have a great day, everyone.
Thank you.
Thank you.
Appreciate it.